Hello, everyone. I'm your boss, Joe Boss, and welcome to a week ahead trade plan. Every Friday, we go ahead and draw expectations for the week ahead. I was able this week to go through some of the outlooks I've been sent. And I'd say that the expectations I had for today from yesterday are pretty much in line with what I thought. So along the lines of, at least on the dollar side of things, and if you trade crypto, if you trade commodities, if you trade equities, the dollar is one of the few assets you want to look at first because all of it is denominated in dollars. So, let me take a sip of water. Alrighty. So, what we'll do today is set our nominal expectations for where we can find likely tops and bottoms, and then kind of go from there. And we got all of our settings set up. So it seems like most closes for a week are somewhere around here. That's nominally where you find a lot of your closes. Seasonally, though, you end up closing a bit lower. You can see not very many of your closes over the last 17 years are there. But here's one thing we can do. If we want more data, we can go to a daily chart time frame. And there we go. Now we have 34 years of data. And you can see net, it's effectively the same. You have one close way up there. You have a few closes around here. I'm guessing if you added this and all these, it comes down to around 20%, maybe a little more, 22, 23% of closes next week over the last 34 years come in above the R1 pivot. I'm not too sure. Now looking at that, it's like, well, it's pretty low odds of closing up here. A lot of the outlooks that I've read are dollar bullish going into FOMC, and then everyone essentially that I read put their hands up and said, we need to actually see how the rest of the data throughout the rest of the week actually prints before we can, start having huge convictions on swing trades. That's essentially the interpretation that I had from yesterday. And it's nice to see these institutions coming to essentially the same conclusion. Hey, Ari, nice to see you in here. Let me know if there's any charts you'd like me to pull up. Just let me get through the dollar here, and then we'll go on to... Again, I give priority to guys who are here in the live chat to look at whatever we want to look at. All right. My initial view is, okay, I'm going to be looking at these weekly ranges. And these weekly ranges say, okay, close most of the time around here. Seasonally, though, a lot of the closes are either down here like this, or like way down here like that. I'm not too sure we totally reverse this move. I'm willing to go for a more neutral view of how we move into next week. So I'm gonna kind of put my arrow for a close around there. And it's the 15th today. And now let's go ahead and look at our high odds. Let's go ahead and hide the seasonal data first. Okay, so this is a distribution of where a lot of the tops come in for a given week. You can see we have 3 modes or 3 peaks. So we have this right here, which would be where you get a lot of your, say, more bearish tops, right? If you get your top very close to the open of the week, you're going to likely find that's going to likely be a bearish week or very, very flat, low volatility week. over here, this is where you find more range bound highs. It could be a bullish or a bearish week, kind of depending on how the latter half of the week plays out. And then up here, this is just definitively, yeah, this is bullish. This is, or a really big old top wick. So would I take this sort of move into account? I would, but it would have to be based on going above here. Because you see how we have this in the data. So I'd say once price starts moving into the trough, that the next most likely thing is to go to the next most likely peak at that point. And hopefully that makes sense. So I'm going to set an alert actually on that line there. And I'll timestamp that. And I'll timestamp both of these lines. So this would be my nominal trade plan going into the week ahead here. I'm not so sure how much lower this will go, to be frank. But if the latter half of the week shows significant improvement in economic data, for example, with the flash PMIs for Europe, then I would expect us to have the larger close. So I'm not expecting a huge move lower in the first half of the week, only post FOMC. So from Wednesday, Thursday, Friday, that would be when I'd say that the downside risks can actually materialize. And if the Fed is, particularly hawkish, having a more bullish drift here, like closing essentially at the 104 level, could be in play. And yeah, that's how I see the dollar playing out for the week ahead. Aussie dollar, sure thing. Oh, hold on a sec. Okay. Well, nice to see you around here, Ari. I'll go ahead and pull up Aussie dollar for you. And if you watch the stream recording later, you'll watch this. Okay. Let's go ahead and pull up our high odds. Wow, a lot of highs next week are up here. And let's check out our low odds. Oh, okay. We got a serious gap there. So the gap I'm referring to is right here, where we have these 0%. So this is like a probability gap where we have probabilities up here and probabilities here and no probabilities here. So I call this a probability gap for this indicator. And I consider this somewhat a tradable event where nominally I would expect maybe something like this. But if you go below and trade into the gap, the idea is you move into the next most likely area, which is somewhere down here. And that would be particularly bad. So let's first just draw the nominal trade plan, which I believe is something along these lines. Go ahead and pull up our closing odds here. Yeah, our closing odds are also neatly in this area. Set that to green for our bullish move. And then either flat or a move like this. Let's go with whatever the highest odd setup is and just go with that. Color that one blue for our closing odds. And now we're going to go ahead and look at our high and low odds. Oh, wow. Okay, so we are lined up exactly with a couple of peaks here. Yeah. So let me go ahead and bring something up. Back to those low odds for Aussie. So in this indicator, it says in the last 21 years, relative to pivot points, the low for the week has never been between S1 and S2. That's what that's saying. If we use something that's not seasonal and not relative to pivot points, we end up with this. And note how, when you overlap the two, our probability gap lines up with this area right here, this peak. So I'm a bit cautious about maybe trusting this gap, to be frank. It depends on how strong the seasonal effects are. And the nice thing about when you actually have the data in front of you and the probabilities in front of you, you can try and make an interpretation about what that data means. So if we look at this and we know, okay, usually during the 12th week of the year, seasonally, you have FOMC, and when FOMC moves very, very strong, you can get a lower move on Aussie dollar. And you know what? That going below the 65 handle here makes sense on a particularly strong FOMC. And for all intents and purposes, this FOMC is going to be strong. They're going to have a hawkish posture. It's just about how hawkish are they going to be? Or do they surprise dovish, where more FOMC participants than originally anticipated have higher dot plot expectations? That is, instead of everyone expecting 2 cuts, more people than expected are thinking of 3 or 4 cuts this year. Because I still think it's too soon to simply call it that we're only going to get 2 cuts this year. I think we probably will get 3 or 4. And in my mind, I'm actually leaning towards 4. Because of commentary from the FOMC already saying that there's actually more of a risk to keeping their policy too tight into the end of the year than too loose. Because there's only so many meetings for them to change policy that if they wanted to move at a steady pace of 25 basis point rate cuts per meeting, that automatically puts a cap on the amount of, well, how low their Fed funds rate will go. Unless they do a surprise and try and communicate, oh, we're going to do a 50 basis point cut at one of these meetings. You know, we'll do a 25 here and maybe one more 25 or a 50. Because remember, those are options. The Fed isn't just, forced into only doing 25 basis point rate cut moves. They can go by 50. They can go by 75. They can go by 100. And keeping that expectation in mind is going to be important, because the move after this FOMC is going to be frankly quite dependent on those future expectations. Because after this March meeting, you have no meeting throughout all April. Then you have May, June, July. You're into summer at that point, and either economies are recovering, inflation is recovering, and these central banks are clearly on the rate cutting path, or you can start to see some more disruption in assets. You can start to see returns in a lot of these companies get hit a bit more significantly. I mean, a lot of companies over the last 6 months have laid off so many people in anticipation of, as as an economic security measure for their own company to stay profitable during potentially some likely hard times ahead, which is why a lot of things are happening. Recovers into the second half of this year. Actually, hopefully, a good chunk of those people will get their jobs back. There's a rumor I saw. This is a bit off topic now, but about the one theory about why all these tech workers were laid off is because there's about to be apparently 100 H1B visas, I believe. HB1 visas. I don't know the exact name of it, but apparently there's a bunch of highly skilled workers who are about to get their visas. And the argument is that these big companies are trying to lay off people who they've hired since 2020, and then people who aren't that senior, and then hire these new immigrants at like $20,000, $30,000 less of the salary. That was something new I heard. I thought it was kind of interesting, and I'd like to look and kind of see how valid that idea is. So this would be the nominal trade plan, back to FX here. This would be the nominal trade plan I have for the Aussie dollar. And it lines up with our ranges. It lines up with our closing expectations, I believe. Yeah, you can see most of the closes are here. So this would be the nominal trade plan. And in a scenario with a particularly hawkish FOMC, I would just be careful buying any lows around here, and hell, even buying any lows around here. Typically, for people who are bearish going into FOMC, what they do is they hold a short position from like around here, or from a little bit higher if they can get it in the first like 24 hours. Let the thing sink down, and then sometime around the beginning of Monday's trading session, hop out. Not Monday, Wednesday's trading session, which is the day after FOMC. That's generally the approach. And a lot of outlooks are just bearish Aussie. Not so much on the New Zealand, though. A lot of commentary I've read is quite bullish on New Zealand, which I found kind of interesting. Let's go ahead and set our down move here. So this would be red down into, yep, I believe this is, I think that's, yeah, right around there. Go ahead and timestamp that. And I'd like to click on my indicators here. There we go. Let's look at our high odds. Also, I do see the, also, hey, can you check out some of these yen pairs? We'll be getting to that in just a sec. Oh, gotta set that to green on the bullish expectation. I don't know what would actually cause this sort of move, so I'm kind of skeptical about this nominal expectation here on New Zealand. We'll see how it lines up with the ranges. And then something along these lines here for the close. Oh, set that to blue for our close. Alrighty. Oh, wow. All right, so maybe a bit lower. And that is a high. I really wonder what would cause this. I'll have to go through the outlooks tomorrow on Saturday in the outlooks review event for everyone who's in the trading group. When you get these indicators, you get access to a trading group, and you'll be able to go over these outlooks with me. We'll do some more in-depth research on some of these expectations and these trade plans. and maybe update them going into Monday. So this would be, yeah, I'd say this is a pretty, yeah, that is the nominal expectation there for New Zealand dollar. Let's check out pound. Okay, bit of a wider range there on the pound. Oof, a lot of closes are just evenly set around here. It's either closing up here or closing down there. Real quick. I would probably say closing down here looks like the deal. That's a more bearish close for sure. Okay. Not so hot on the pound. Oh, we want to look at our high odds here. Wow, a lot. I don't even think you'll get that high. I mean, maybe it does something like this, right? Let's go ahead and pull up. Yeah, something like this. And then down. Check out the low odds. Yeah. Yeah. That would be my expectation going into the week ahead here on the pound. I'm not particularly keen on the Great British Pound. Its economy is improving as expected to improve more. It's just relative to a lot of the G7 or G10. It's, doing a bit better than Canada and definitely a bit better than Japan. But speaking of Japan, wow, we set the bearish expectation there way ahead of time, and that did not get met. That was interesting. Not all expectations do get met. But the whole point of setting these expectations is you can see when they're right, when they're wrong, and then we can do what we can to learn from them. Instead of saying, oh, you got it wrong. Oh, you got it correct. I mean, there's some weeks where you call the exact low at the exact price at the exact time and the top and the close for the week or the entire month. So sometimes you're right on point. Sometimes stuff like this happens. And it's very important not to take it personal. Just to be smart about it. Let's not forget the euro. Also, we had that bullish expectation, but then PPI totally ruined that, huh? Let's go ahead. Check it out. So a lot of lows are around here. Pretty standard, but then there's this downside risk here, so I'd say that would be low expectation. And yep, somewhere around here. Go ahead and color that one red. There is definitely a risk of having another move like that down to the 108 handle. But nominally, I'd expect a low around here into FOMC. Again, we'll have to see. But going into FOMC, I really would not be surprised to see this sort of move here. To find the low around 108. Which would really suck for me because, that trade's on. This trade's been trimmed. So, yeah. I mean, the good part for myself with these particular trades is that I know generally what to expect. So I can be like, okay, I don't mind. I did trim up here a bit, but I didn't exit the trade. So it's like, it's pretty neutral at the moment right now for me. I do have longer term dollar bearish expectations, which is why I'm doing what I'm doing with those particular setups. I would actually prefer to see up, then down, like a lot of down. But, oh man, see, this is tricky on Euro because I know on Thursday, European flash PMIs come out, and those can send you up like a rocket. So from here, I'd expect like going way higher. I'd at least expect, the move up to here on good flash PMIs. And even down here, it's like, you're closing a bit sideways. I still think, some recovery into the close then on good flash PMIs. And then it's a guess where this thing's going to close. Look at that 14, 14, 14, 14. Seasonally, it's like, it's all uniform. Just roll a die. Tell me where it's going to land. Similar sort of look here, but maybe we can use a box to set our expectation then. So somewhere around in this box be my nominal closing expectation. Yeah, that works out. Okay, let's move on. I could bring up more of these yen pairs, but I mean, at that point, it's going to take me another 30 minutes to cover all the expectations and the nuances here. I just think yen's going to be bullish across the board, so I'll just set some closing expectations for the week ahead here. Oh wow, yeah, there's some stuff up there too. So this would be your nominal bullish close, considering we have. Oh, actually no, it would be bearish, right? So it'd be something like, oh wow, there's actually a good chunk of closes down there for the particularly bullish scenarios. Yeah, and then you got a slight peak down there. So is for yen strength next week, so I'll just put that there. Oh, I was so close to hitting that expectation until those last 2 days. And we have a similar sort of look here on the euro. Wow. Yeah, that does make some sense. Yen might be struggling against the euro a tad there. Okay, so it's probably more like this. So yeah, probably some kind of rollover here the first day or two, down, and then like this. I'm not terribly sure. Again, I'm not following yens all that close because I don't get that great a leverage on trading yens. So I don't focus terribly on setting expectations for yens, but man, and this thing is so crazy volatile. Yeah, these yield spreads are actually pretty darn positive at the moment on that 12-hour. Yeah, these yield spreads seem to be improving. Yeah, it's mostly on the short-term side of the yield. And that makes sense, at least on the euro yen part of things, but I don't know, we're going to see just how strong the yen can get on a rate hike. Oh my god, look at all these freaking closes all the way up there. It's a guess where the close is, unless it's like net bearish. Again, I'm not putting too much effort in here, but this is actually a good exercise. If you're not familiar, let me explain it. If you're not familiar with an asset and you want to begin to start setting good expectations for an asset, like what I'm doing here with yen, because don't get me wrong, I'm familiar with yen. I read a lot of outlooks from Japanese institutions. They keep me well informed. But because I'm not actively trading it, I don't find myself always setting the best expectations. But the way you get better is you start setting your best expectation that you currently can set. And then over time, as you do that week to week, month to month, you'll find new bits of information that will help you set better expectations as you listen to institutions, commentary from market participants, doing your own research, talking to other traders. You'll be able to acquire information over enough time. And because you're setting expectations constantly week after week and recording them, you'll be able to actually compare. That week, a week or two ago, I set some bullish expectation and I was totally wrong and I didn't know why. Well, that's now I find 2 weeks later, it's because of XYZ reason. From XYZ central banker said this or that, or this government official said this or that. And then now going forward in the future, you know to be aware of such risks. And that's one of the reasons why I think learning how to trade is particularly hard, because there's so much information out there that is taken into consideration and needed to be taken into consideration when setting expectations on all these different assets. And all these different assets have different things that need to be considered. That's why it's very hard to find someone who is an absolute expert in trading every single asset under the sun, because they really need to do they essentially spend their whole day reading research and commentary from people who are specialized in doing analysis on particular assets. And that's how they kind of become a jack of all trades at a higher level, not like on a more generalized level. And it takes a lot of work and a lot of data and a lot of years, frankly, behind building up that muscle of figuring out what works and what doesn't in markets. So let's wrap up this with the FX side of the show. Let's look at the low side here. So a lot of lows are roughly around here. I'd be surprised if, we can look at a high first, frankly, but I'd be surprised if we moved more than half of your tops come in. Really, this would probably be like my go-to dollar long play next week. This looks pretty good for short, just because of the odds. And then, of course, there's risks above R1, right? These are smaller odds past that R1. Yeah, something along these lines. I'd say, yeah, past the R1.5, I would start getting concerned. I think I set this to green. No. All right. Apply defaults. Set that to green. Set that to green. I believe I need to up the line thickness there. And text. There we go. All set. So I would be concerned of going higher past this line. It's just, I don't know how high this thing would go in that scenario. Maybe up to here, but in all seriousness, it'd probably go into the higher upper half of the 136 range if it did crack that on FOMC nonetheless. It'd induce a lot more volatility than I think some people would be willing to expect if that was the case. Yeah, somewhere around here you find most of your lows, but during a particularly bearish week, this is oh, hon, I'm flipping here, right? This is dollar CAD, not CAD dollar, my bad. Probably one of the first times I actually got kind of stuck up on that. So this is like this. Yeah. So the analysis still applies. Actually, no, that is that is going to be interesting. Maybe the CAD isn't hurt all that much from it. So let's see. So some closes are down there, so we'll go with that on the closing side of things. A lot of tops come in here during FOMC. I'd say up here becomes a risk, right? Well, let's go with the nominal expectation. Yeah, this is a particularly... Yeah, so during bullish FOMC weeks, it really can be a guess where this thing ends up. And I know you can look at the ranges and see like there's a peak right here and there's a peak right here. But I'd be more cautious, frankly. I would just be more cautious. I mean, I might be wrong setting an expectation that looks like this. But the whole idea is to set nominal expectations. Again, I'm not terribly bullish on the Canadian, so I feel kind of weird drawing a risk on look on the Canadian. Yeah, I do think we'll have some the high for the week, occur in this area here. It's just, this is definitely not nominal. And sure, we could maybe draw something along these lines here where it goes totally nutso. And maybe that is the thing we should be expecting on this particular pair is during FOMC, the thing just rips, right? And then we just drift lower into some close for the week and not even try and set an expectation for. I mean, most of the closes are also like way down here, right? yeah, this is really tempering my expectations of how potentially bullish FOMC could be. It's definitely tempering my expectations. So first, let's work on the closes here real quick. So somewhere around here in the low 135s is where I think we're going to end up closing. Now it's a matter of, okay, how high is this thing going to go or how low? Where are we going to approach this closing area from? Again, this is nominal, where most of the closes are. And I'm kind of splitting hairs between where the peak is here, where most closes are seasonally, and where most closes are usually for any given week. Most closes for any given week are around here, but for next week during FOMC, you have a bit more bearishness. So I think for now, what I'm going to do is I'm just going to go with this plan here. I know it looks kind of funky, to be frank, just to say things going to go up and then reverse the whole move. I'm just gonna go with this for now because I'm having a hard time setting expectations on the low side of this pair because of how frankly volatile this thing could very, very easily get going into FOMC. And now we have the good old yen, and this thing's probably gonna tank. This is gonna be much more straightforward. Yeah, most of your closes are somewhere around here. I mean, don't get me wrong, FOMC could come out and give hawkish expectations. Let's see here. Let's say we move up to around there, just below the 150 mark. Oh, and it like really pulls back from there, right? So FOMC, you get it, and end a week, you pare it back. That would be my... It looks actually a lot like USD CAD, huh? That would be my expectation. Okay, finally onto the commodities now. Oh, gold not holding on too well. Next week looks good, though. Most of your closes are essentially sideways or a bit of positive drift here. So I would say into the close, things are probably going to turn out a-okay. Yeah, somewhere around here. Blue timestamp. Now let's go ahead and look at our low odds here for the week ahead. Okay, that is pretty straightforward. Just a low somewhere around there. Yeah. And probably just a positive drift into the end of the week. These trade plans are now starting to look pretty darn similar. Yeah, I mean, if the thing does go up in the first part of the week, it doesn't have that much upside and could very easily give you that pullback and then just readjust these expectations. It could look like that. But all in all, plan to the last two assets we looked at. Let's check out crude. Crude should be bearish into the first part of the week and bullish in the latter half of the week. Yeah, probably comes back, checks out 80, maybe a little bit below 80. Right? Maybe 95, 50-ish. And then recovers into endo week fairly well. Let's go ahead and check out the seasonality here. Yeah, it has pretty good recovery odds here, I'd say. Yeah, pretty darn good recovery odds. Let's go ahead and do that. And now we have crypto. Oh, I think we're going to end up closing sideways on the week. But I'd say I'd say I'm not going to expect a super major pullback on Bitcoin, to be frank. I know there was a pullback here. It recovered, so I was still bullish. It fell again, and it's recovering. I'm just like for gold, and just like for euro, and actually I should probably bring up the S&P. I'm not gonna get terribly bearish on these assets. Like, don't get me wrong, S&P could probably get hit here next week, right? Finding your low somewhere around there. Yeah, that lines up actually right with a peak in the low distribution. Here you can actually see it right there, this spot. We actually tapped that in this week. So probably pull back to there, and then post FOMC, we got some recovery. That would be the expectation. A lot of these trade plans are starting to look the same now. Just down, and then first part of the week, up, second part of the week. Let's look at our closing odds. Yeah, and that is where most of your closes come in, somewhere around this area between, I don't know, 5170, 5240. Let's check out the NQ. Okay. A little jumbled there, but we're good. Oh, we gotta update our time frame there. Spiked lower into that close. So let's go to here. Red. Now during FOMC week, this can be get hit particularly hard. No, it seems, yeah, most of the lows are somewhere around here or here. Yeah. There's one occurrence that's like way down here, but that's probably COVID. Let's now look at our closing odds, which would probably be a bit more optimistic, to be frank. Yeah. Just a tad more optimistic NQ. I'm not going to draw expectations for the crypto stuff. It can get really crazy next week, and crypto could drop 5,000 and then instantly recover, and then by the end of the week be back at the 70K threshold. So I just have a hard time setting, most people, frankly, have a hard time setting expectations for what the next week is going to be like. And most people, frankly, are afraid of doing what I'm doing here because they're afraid of being wrong. And even if they're not afraid of being wrong, they don't want to go through all the effort of doing the stream and doing all this stuff and actually riding out your expectations. But this is a great demonstration, I think, just to at least see how I view, hey, these are things that I think are worth prioritizing when it comes to learning how to trade. And I'm pretty much done with everything I wanted to cover here today. So those are all the week ahead expectations, which is pretty much down, risk off first half of the week, risk off second half of the week. That's pretty much the entire outlook I have for next week. And when I read the outlooks from institutions, and anyone who's part of the trading group listening to this, we'll be covering that stuff together tomorrow. That, is some institutions, well, net across the board, most institutions are risk off into the first half of next week. But then when you look at commentary towards what expectations are towards the second half of the week, there's this whole uncertainty deal all over again where people don't know if something's going to actually print green or red. They have a hope everything's going to be printing green, and they're really holding on for dear life if stuff prints red. So, I think with that all said, I covered everything I wanted to cover. So I'll see you guys in the trading group tomorrow for the Outlooks review event. That'll be 2 p.m. Pacific, 5 p.m. Eastern. And for everyone else who watches the streams, I'll see you Monday at the same time. Take care and have a great weekend. See you guys in a bit.